October 2007, Michael Burry quietly sold off most of his US equity portfolio. 6 months later, Lehman Brothers collapsed. March 2020, he did it again. 2 weeks later, COVID crashed markets. August 2023, he did it a third time. 8 weeks later, Silicon Valley Bank failed. He just did it for the fourth time in his career. Watch until the end of this video. I'll show you the exact date in August that will tell you whether this signal matters and why most investors will completely miss it. Most people think of Michael Burry as the subprime guy, one good call in 2007. But the truth is more interesting. He has done this exact move 4 times in his career. Each time you could see it in his public SEC filings. Each time it came before the dislocation, not after. October 2007, 91% of his portfolio liquidated. Lehman collapsed 6 months later. March 2020. 85% liquidated. COVID crashed 2 weeks later. August 2023, 78% liquidated. Silicon Valley Bank failed 8 weeks later. And April 2026, 93%, the largest of all four. Here's what makes this fourth time different. The prior 3 liquidations all came before a specific visible problem. Subprime mortgages, COVID, regional banks. Burry could point to what he was worried about, and he often did cryptically on social media. This time he's not pointing. His May 2026 X post called this, quote, the biggest short since 2008, then he deleted it within hours. He has now filed 13 Fs for 2 consecutive quarters with extreme single position concentration. And the one thing he's done differently from every prior cycle, he's stopped explaining his thesis publicly. The question worth asking is, what would make a known contrarian go this silent? To understand why this signal matters, you need to understand how Burry actually does this. He is not a quant. He has no MBA. He is a former neurologist who taught himself value investing by reading SEC filings on nights and weekends during medical residency in the late 1990s. He posted his analysis on a Yahoo Finance message board under a pseudonym. Hedge funds noticed. They started putting money behind his posts. That is how Scion Capital was born. From a residency apartment with primary documents and zero professional infrastructure. His method has been the same for 25 years. Read what nobody else reads, find what nobody else sees, then wait. Now to the trade itself. Burry's Q1 2026 13F shows 12 of 13 positions liquidated, approximately $160 million in cost basis converted to cash. Only one stock remains in the disclosed book. But here is the part most people miss. The 13F only shows US listed equity positions. It does not show put options unless held against shares the fund already owns. So when Burry says biggest short since 2008, the actual short exposure is invisible to the filings. It is potentially many multiples of the visible cash. He used the same trick in 2007. He structured the subprime bet through credit default swaps that did not require disclosure. The visible position was small. The actual position was enormous. Here is the signal I promised you at the start. Most people are watching Burry's tweets. Some are watching his 13F. Almost nobody is watching the date that actually matters. Burry's Q22026 13F files on August 14, 45 days after quarter end. That filing will reveal one of 3 outcomes. 1, the cash position grew larger. That signals his conviction is intensifying. Based on his historical pattern, the dislocation is closer than markets are pricing. 2, the cash position is unchanged. He is waiting for confirmation that has not come yet. 3, he deployed the cash. The trade has either started paying out or his thesis resolved without a crash. August 14th is the moment that retroactively defines what April actually meant. Market. August 14th. That is the date that resolves Michael Burry's 2026 bet. Most investors will see the filing as just another quarterly. You now know it is the moment that retroactively defines whether April was a warning, a strategy, or a coincidence. Subscribe to Ticker. Next week, I am walking through Warren Buffett's $20 billion Japan position, which is positioned for the exact opposite outcome.